2015. It's 8:04, 8:05 a.m. Central Time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. The overnight session had quite a bit of news coming across, mainly from China. Some heavy volatility there. News flow was not really market moving from Greece. Lots of rhetoric from both sides. Risk was off on the Eurex Open with focus on Merkel and Juncker comments from the overnight session. Eurogroup to hold a conference call on Greek ESM requests today. And ECB to review Greek ELA limits. Shanghai Composite and Hang Seng finished negative 5.9%. They were down as far as a negative 8% overnight. Chinese equities continue to slump despite more government measures of support. Hang Seng's biggest daily loss today since 2008. Widespread trading halts continued with reports of over 50% of total listed companies suspending trading on extreme market volatility. What they're seeing over there is our September, October 2008. Gold and oil are higher. The US dollar is higher versus the pound, lower versus the yen, and lower versus the euro. And let's see. Let's switch gears here and take a look at what we have for what's on deck for today. I was looking for a news item that I can't find now. This morning, the only thing that we have ahead of us really is the crude oil inventories at 9:30 Central, expecting negative 750,000. Distillate inventories plus 750,000. U.S. gasoline inventories at 0. Consumer credit looking for 18.5, and that comes out at 2 p.m. Central, 3 Eastern. At 9 o'clock this morning, EU Speaker Mogherini on Middle East peace process in Cuba. I'm not sure that's going to affect us. 1 o'clock today, 1 p.m. Central, 2 Eastern. Fed Speaker Williams on economic outlook in Los Angeles. We'll be looking for those comments. Also at 2 o'clock, the Fed releases minutes of June 16th and 17th FOMC meetings. And in aftermarket, we got our earnings kickoff with Alcoa expecting 0.23 or 23 cents. So let's switch gears here real quick and look at our overall picture from yesterday, what we did versus what was expected. Yesterday's hypo 1 was when the trader bite was taking place. The market was trading just above yesterday's high or the prior day's high. On the trader bite, we're looking for a whoa, let me see here. I'm a little bit off today. So this is where we were during the trader bite yesterday. We were trading above the prior day's close, and we were on the edge of the prior day's or Monday's high. And what I discussed is a double distribution profile overnight. If you remember me drawing this with a weak low, and I was looking for a break lower. The idea for today was, for yesterday, the primary hypo was for us to push through to the point of control at 62 and a quarter, potentially slightly through, wind a little bit, and then continue to rotate up higher, looking for a target, an extended target of 2093. That didn't take place at all. The second hypo is for it to push through, get trapped, and then push beneath it, consolidate, and then start to walk its way back up. Hypo 3, which I mistook for Hypo 2 because I listed both of them as Hypo 2. Hypo 3 is to fall back in, get stuck in the point of control, and then basically trade yesterday's range and then continue to resume its move downwards. I gave that a remote probability. Clearly, I shouldn't have. So yesterday, my key plan was way off. The market ended up pushing much lower. In my opinion, the market was actually setting up for a rally because the day before we had shifted the point of control down for this balance zone and finished higher. I was looking for a continuation, a test of 2077, and then the gap zone, 83 quarter to 86 quarter next, and so on. Instead, the market actually rotated straight down, straight down through the point of control, back down into the VPOC. It rested a little bit in the MCVPOC, and then it took out the low and pushed all the way through to this low volume node at 36.75, which was our next target down. But I didn't really discuss that. I just didn't see that as a high probability. In any case, lots of news events throughout the day, lots of noise. And eventually, what we started getting is some good news out of Greece and a potential for a Greek bailout in the works, a temporary liquidity relief kind of plan, and then later on with some more comments, we ended up taking all of that back. Yesterday's range was very high. It was outside of the second standard deviation. Second standard deviation range is at 38 and a quarter. Yesterday we traded at 41 and a quarter. Very unusual range, especially for an up day. This is an excess low here, as you can see, a nice big tail on this day, marking an excess low, and this is setting up for a really decent base to take off from and resume what was yesterday's Hyper 1 plan, which is to push higher. The overnight news has caused the market to retrace a lot of what it did. Here I just extended the microcomposite from last week, from the 29th all the way through and to include yesterday. Point of control is at 57.5, 57.75. And yesterday we finished very strong. We did end up missing that 77 target from Hypo 1 by 3 ticks. Again, very unusual, unpredictable movement in my opinion. Just a lot of frenzy there. So with that, we get carried into the overnight session. The overnight session sold off immediately. On the open, we immediately rotated down and pushed into the point of control from yesterday at 43.50. We pushed through it by 5 ticks, and then we found a bounce point from there. Very unusual profile. Again, a double distribution, but something you don't see very often. A nice taper on the low. This is a fairly strong low. With the market pushing into the upper distribution, this looks like it is likely to chop around here, barring news, and then rotate up and take back yesterday's close. So the primary hypothesis for this morning is if it's not able to get through this 54, 55 area on the open, then it's likely to take back this 64, and it's likely to get right through this thin zone in the overnight and check the overnight high. Remember, 98% of all 98% of the time, the on 1400 sessions tested, the ES takes out the overnight high or the low. The question is which one comes first, and that sets us up for an early trade. So with this, my guess is it's likely to be the high. Again, the trade is very heavily influenced by the news and what comes out of various politicians' mouths, and it makes for an unpredictable environment. It's a good option trading environment, really. So anyway, this is where we are. Market consolidating in the middle here. I'm watching very carefully for a break below 54. If it breaks below 54, then the overnight point of control, um, or this old overnight point of control comes into play at 53.50. And then we're likely to retest the point of control from yesterday. The point of control from yesterday is built on a trend day and is not likely to be super valid as a guide, but it is still yesterday. We have multiple distributions. We have one, two, three, and four areas that the market liked. These areas are very important to note. These LVNs are very important to note as test areas. Right now, the market's trading at 59.75, right in the middle of the middle area. And again, 54, 53 area is the cutoff point. So this morning, if it does pull down, I'm looking for it to bounce back up, push through this LVN, recoil, and then take out yesterday's high and the overnight high. That's my hypo one. Okay, uh, that's the plan for today, and I'm sticking to it, as they say. Let's switch gears again to our trade wisdom segment, which is on every Wednesday. So what I'd like to talk about today, and I didn't announce it on Twitter before, but seeing the volatility this week and being monitoring risk for stage 5 traders, as I always have for my prop traders. It's clear that a lot of people really struggle with the idea of this 50-50 outcome. It seems like when volatility picks up, the action causes people to kind of throw out their risk parameters and to jump into gambling mode. There is a gamble in every trade. There sure is. And I'll explain why. Trading and gambling are different in a key aspect, and that is probabilities. When you're gambling, you're betting on very small odds and are relying completely on chance. The next card is not contingent on the card below it on a multiple deck stack. So just because you pulled a queen does not mean that you can't pull a queen again. There's no sequence to gambling. Just because you rolled a snake eyes does not mean that you won't roll snake eyes again. There's no correlation between the current trade or gamble and the one before it. But as human beings and with our minds designed to always create relative correlations, and our education system instilling that within us throughout our lives, we're constantly looking for correlations that create a gambler's fallacy, and we are constantly looking for patterns that are non-existent in trading. So the difference between traders and gamblers, again, gamblers are betting on very small odds and are relying completely on chance. Traders are betting on reasonable odds. This is the key factor here between a consistent and inconsistent trader. Traders are betting on reasonable odds and are relying on prior behaviors and patterns. There's a pattern to the market. We discuss this every day. We go over the cycle, the auction cycle every day. There are certain patterns the market follows. And if you've been following long enough, you'll see that Hypo 1, it plays out more often than not. And Hypo 1 is being introduced before the market even opens. And then I follow up with comments on Twitter. And then I follow up the next day to show how it did or did not work and why. And the only way I can do that is because there is a pattern. The outcome of every trade is the same as the outcome of every gamble. This is such a huge thing. The outcome of every trade is the same as the outcome of every gamble. It is either a winning or a losing trade. There is no way to predict that. There's no way to know it. Not defining risk along with over leveraging are key reasons for failure in trading, in my opinion. These two components together make up most of the problems that folks run into. Uh, the volatility, the easiness with which we can trade and put on a trade causes people to sit around and wait for the moment where they believe that a trade cannot lose. Because otherwise, why would they trade? You would have to be really, really, really crazy to put on a trade when you don't believe that it'll work, right? Well, the fact is, you cannot, whether you believe it or not, you cannot predict whether the next trade will work. Even on a 99% winning system, you have no idea where the 1% of those trades lie in a data set, in an infinite data set. So what happens is when you don't define risk, you're not accounting for that random loser that's going to come through. And what happens then is that the risk for the one trade that doesn't work far outsizes the system's ability to overcome its losses. And many people do that. I've seen accounts get reduced by 50, 60% this week on one trade that just could not be taken off. It's moved far enough away from me that it would be stupid for me to close it. Might as well add, or I can't close it now. I'm in the hole. There's no way I'm going to get out. There's no way this is going to continue. And it continues and it continues and it continues. And they get to the point where I have to close their trade for them, which I hate to do. Professional traders put on trades when they see favorable odds. This is a key thing to remember. Only trade when you believe the odds are in your favor. And by odds, we mean probabilities. And because there are probabilities, there's no certainty within them. Inconsistent traders put on trades when they believe they will be right. This is a big difference. So the only time you'll put on a trade is if you believe that, the moon and the stars and the planets have aligned themselves and that this cannot lose. Therefore, you muster up the courage to put on the trade at that moment, believing that it should work. And those are very dangerous words. Should, must, has to. Once that happens, a trader will only see, and this has been proven, and there's a great book on this called The Chimp Paradox. The trader will only see those things supporting their decision, and will not be able to see the contrary opinion or the contrary data until the trade is closed. That's when you look back at a trade and say, oh my God, that is the stupidest thing I've ever done. Why didn't I see that? It's because the person in the middle of a trade is not the same as the person who has a flat position on and is assessing the market without bias. If they will be right, then why address risk, right? So if you believe that the only time you'll trade is when you believe you'll be right, then why define risk? And that's what gets people in trouble. This week is extremely volatile. I've seen people just take some big hits, and I've received emails complaining about the fact that they've built up a nice stake over the last 3 months and they've wiped it away over the last 3 days. And this is the issue. You don't have to use a very restrictive stop. You don't have to chop yourself to bits, but you have to allow for the higher volatility creates bigger rotations. You have to allow for the additional risk, but you still have to create some sort of a risk plan. You still have to tell yourself, I'm risking $300 for a gain of 450 or 300 for 300 or whatever it is. Please define your risk. I know this is something that we talk about a lot, but I believe that a lot of people don't understand the fact that every trade has a 50-50 outcome, and you cannot stake a large account, a portion of your account on any given trade. If you do so, you're gambling, and I think you'd go a long way, a much longer way with your money if you just take it to Vegas and just enjoy your time while you lose your money. It's not fun to do so in front of a computer and feel hopeless and helpless. Good luck. That's all I had for you today. Hope you enjoyed this. Good luck to you, and we'll talk again soon. Take care.